Hey traders, today is Wednesday, December 10th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at dollar CAD. Ahead of dueling central bank rate decisions, we have the Bank of Canada on tap in just a little bit, followed by the FOMC later today. Here's what dollar CAD looks like ahead of the releases. We broke that June uptrend last week with a massive decline on Friday. Was the single largest single day decline since April. And certainly that took us back below trendline support. The focus is on this decline. And while the risk is lower, both those CB meetings later today have the potential to offer some volatility here. So if we dive down to the daily chart, again, this was the single largest daily loss since April 9th. Okay, that was way back here. That was also a major trend break as well. Took us below that trend line from July, took us below the 200-day moving average, and below this pivot zone right here, the 2023 and 2022 high close. Major pivot in price is the focus. That's the hurdle the bulls would need to get into to get this thing to suggest that a low is in place or a larger reversal is underway. Next support level down from here is the 618 retracement of the advance off the yearly low. You're looking at 37.69. That's a bit of ways away from where we are right now, but that's the focus. Here's what the 4-hour chart looks like in the structure of this decline. A simple pitchfork extending off the October and November highs has us trading right below the 25% parallel, so that's initial resistance. Weekly open support comes in at 38.20, a break below that, and you're looking for that 618, which converges on the lower parallel into the close of this week, into the open of next week. So that's the downside levels. On the upside, 38.99, 38.88, that level we just discussed, the 2023 high and the 2022 high close. That's the pivot zone you would need to suggest a more important near-term low is in place. With a break above 39.30, 39.38, that's a 38.2 retracement from the decline off the highs, and the November swing lows, that converges on the median line over the next couple days. A breach above that would shift the focus back to the long side in dollar CAD. As it stands, the risk is still weighted to the downside on the near term. Keep in mind, the Bank of Canada is expected to hold rates. They're actually expected to hold on rates all through 2026 on account of strong growth, inflation, and jobs data. And the Fed follows suit at 2 o'clock today. And obviously, they're expecting a 25 basis point cut. We're going to get the updated SEP, the Summary of Economic Projections, this time around. So keep a close eye on any alterations to the inflationary outlook, which was upgraded, or I should say downgraded, from 2.4% to 2.6% on both core and headline PCE, the personal consumption expenditure. Obviously, everyone's going to be looking at the highly anticipated interest rate dot plot to see what that distribution looks like. It's been widening out. It's not a secret that dissension amongst the committee is growing. There's only a few sessions left with Powell as the head. So a lot of interest will be lended to what that distribution looks like moving ahead and interest rate expectations into 2026. They've already started to get kicked out with the next rate cut now seen in April. So we'll see if that alters or changes on today's commentary. As always, we'll try to keep you updated on X at MB Forex. Till then, best of luck trading, and we'll see you tomorrow. Cheers.